Good afternoon, traders. This is Christian Farmer. It's Tropical Trade Group, and this is your end of day market recap for Wednesday, April 23rd. Risk disclaimer in front of you. Everything that we're going through is for information purpose only, not giving out any advice or recommendations. Everything that we're going through is for information purpose only, not giving out any advice or recommendations. So, what do we have today on our hands? We had a big gap up and basically a bit of a fade. Indices all finished, so I'm going to go back and forth between positive and negative in this video because that's kind of what I feel like this kind of feels like what this market is giving us. So overall, positives, and it's tough to kind of like look at these numbers and come up with something negative, but S&P finishes up 1.5%. Qs finish up 2.2%. IWM up 1.5%. Bitcoin up 2%. Gold, which has been kind of a good proxy for risk on, risk off, was down 2.4%. Kind of a blow off top, I think, in the short term. VIX down 7%. So you look at all these numbers, like, and if you weren't in front of the screens all day today, you're probably like, hey, great day, and really nice. And depending on how you traded it, and depending on how you are positioned into today, really kind of probably dictated your day to some extent. For example, if you were positioned pretty heavy into today, you were loving it, right? And it was a great opportunity to sell the gap up. And I want to stop there. I want to pause for a second between going back and forth with the positive and the negative. Regardless of what environment we're in, when you have a gap up, I talk about it all the time in the Tribeca Trade Group trading room. Gap ups are meant to be sold, especially when they're large gap ups. It doesn't matter, bull, bear market. That's just trading 101. When somebody gives you such a big gap up, especially like we got, my inclination as a trader is to take profits. As an investor, you don't have to do anything, right? Depending on what your time frame is. But if you're a short-term trader, in my opinion, you want to be taking profits into that. So that's the story. If you came in under positioned into today, then you were probably scrambling a little bit. Oh my God, I don't have any exposure on. What do I do? Do I buy this? Do I buy this gap up? So I was somewhat for my positioning, which I try to always go over in these videos for you, as well as what you see in Tribeca Trade Group in the trading room, as well as what you see on Substack, where you could see my open positions, watch list, trade setups. I kind of came in halfway. I didn't have a ton of exposure on, but I did add exposure yesterday. And I'm going to bring up Substack a couple times because I barely ever mention it in these end of day videos. But you could go. My Substack is www. or http ttgtrading.substack.com. It's right here. I also send it out on Twitter. At the end of every day, as well as in the middle of the day, where you can get that midday note where I talk about any fresh setup. So I did something unusual yesterday. I sent out like a morning Substack report talking about new positions that I had put on. So for example, this was the report. I hardly ever send like a morning update, but I was like, hey, I'm getting into some positions early. Why? Because they triggered for me. So we could talk about all day whether or not we like this market and the headline risk that we have. But I've tried to be somewhat objective and say, hey, I'm going to take a trade if I've got a clean setup that looks pretty good. So I did that yesterday with going long Bitcoin. I went long hood. I specified, where I was going to take the trade off. Notice you got the big arrow there. Here's what I did today. Right. I sold that puppy right right into the level that I thought that I was looking for. Right. Case closed. So if I'm being objective taking a trade, and this is very important to set up where you're going to exit the trade. And right now for me, like, this is mostly a point A to point B type market, meaning normally, like, I'm a trend trader. I like to sit in trades for as long as there's a good looking trend out there. But this is not that type of market. And I've tried as much as I can to make adjustments, right? To try to change my game plan around to what the market is giving us versus what I want. I like this market, right? When we're breaking out, out of some, consolidation or breaking to new highs, the wins at the market's back, we're in a bull market, and you get a run after earnings. By the way, like this is also this is a very good point to illustrate, right? This is what we want to see in markets. We want to see, on earnings a breakout or a gap higher on earnings where it surprises the market, and then it runs after that, right? Some people, and again, this is the environment. You have to recognize the environment that you're in right now, right? So a lot of times, this is why I put together earnings lists, names that beat earnings that had good reactions, because at this point, when Robinhood beat on earnings, they ran up to $30, and that was just the beginning of the move. That's a bull market. $30 ran all the way up to $40, paused in here, then ran all the way up to $62, right? That is a great looking, move. And many names do that when you're in a bull market. But that's not the type of situation that we're in right now. I'm going to come back to this, right? So I'm talking about earnings and I'm talking about earnings reactions. So let me come back to that. But in any event, that trade worked. Also, I talked about going long an Argentinian bank as well. That worked as well. So, these things worked quite nicely. And Substack, I talk about that. I also went long. I took a little bit of a shot today going long service now. I also mentioned that today, multiple spots. I mentioned that in pre-market prep this morning, that I was thinking that this name would be a good candidate after we saw good results from SAP. And there's SAP. Real nice move today. I don't know what that candle's about, but in any event, right into resistance though, right? I mean, right into 276 resistance. That's the top of the value area for the month. So again, this is challenging because names are coming from so far below here, their ultimate highs, or all this price action, that they're going to be hit with some overhead selling. Pega was another name in the software space. And software, in my opinion, should do better in this market. Now that it's come down decently, because it's harder to tariff, software names, right? But again, you have to be careful with these names because that's a huge move, huge gap up. It rallied all the way up to 93 and up to 88. So, and back down, it rallied all the way up to 93 and then back down to 88. Now, again, face value, this stock's up huge, up 28%. That's a wonderful, that's a really nice move. So, you have to take that for face value, but is it going to run afterwards? Like I just showed you in that hood chart. I don't know. And that's what makes this market so difficult. For now, it's a point A to point B type market. All right, let me get back on track a little bit, but, and I took profits in service now, by the way. So, I was looking for that type of a move. I even was down in the trade today. I'll show you my trade. I bought some of this about an hour after the open. I wanted to pre-position a little bit. Again, not anything huge. And again, I took a target right away. Service now 833. I added back that target at 820. So my average cost basis was right around 823. And here's where I got out of the trade. So again, a bit risky, but again, every once in a while you got to take a little bit of a shot, I think, and especially when you're seeing things line up. Why also did I like service now? And again, I went over all this information in pre-market prep this morning. Why? Because it's gone up 7 out of the last 10 earnings, right? And this is something that I put a little bit more faith in, right? In terms of a trading setup, a little bit higher probability. And also they went down 11% last quarter. To me, it seemed like the one-off, because you could look back and you could see that the last time it went down that much was all the way back in 2016. So a bit rare. And then the other thing too is not only did it go down 11%, right? And it's kind of like the opposite of what we saw with Robinhood, but if you played a short on service now after earnings, same thing, it gapped down 11%. Don't buy the dip. right? It continued to go down. That this was when the stock, it gapped down to about a little bit north of 1,000, went all the way down to $800. I mean, again, I don't like to go back and to say to look where the stock traded that much, and I'm not looking for it to go back to the previous highs, but it just seemed like it had a higher probability chance that it was going to move back up. Now, watch what it does here. Right, this is the top of the value area. That's 874. So for a future trade, let's see if it can stay above 874. Right, and that's what I would be watching going forward. Right, and that's going to be very important to see if it can do something like that. Now, let's go. I want to talk about Netflix for a minute, and I put out a note about this, and right away someone got mad at me, which is fine. But I said, if this is not a bear market, right, and if this was not a bear market rally today. By the way, bear market rallies, one-day rallies can be huge, right? Just like we saw back on April 9th, they could be a rip your face off rally for a day. So I don't know yet if we're out of that situation. What I would like to see is more names break out to new highs. Now, someone told me, oh, it touched new highs. No, it did not make a new closing high. But regardless, whether it did or whether it didn't, I mean a convincing new high, right? And then begin to kind of break out further. If something like this can do it, because technically Netflix is a growth name, then I think that's a very good sign for the market. But if it can't do it, and if it just hangs out, right, it can't break higher, it kind of tells you that this market is still going to be very challenging going forward, right? We want easy markets. We want to see things improve, and we want to see names, break out like I was showing you in the hood. That's very symbolic of what happens on earnings season, right? Because there's earnings surprises, and then what'll happen is institutions will actually have to buy the name after they report earnings, especially if they're not in that name yet, right? So that's generally how it works, but we don't know if we're going to get that. Right. Let's talk about the indices, because I thought that this was also revealing. Right. I know there's a lot of people who seem very frustrated with the headlines. I know, I get it. Right. It's back and forth with headlines and the administration speaking at different people. But if you've got some levels to watch ahead of time, and that's where my system comes into play, it's to know where you've got short-term resistance. So this way you don't push at short-term resistance. What did we do yet? I talked about this yesterday. Now, again, I didn't know that some of this stuff is going to be completely unpredictable. Guess what? The market's pretty unpredictable overall. But this is where we stopped yesterday. We stopped right at the bottom of the value area. Right? We gapped up. There was news after the close yesterday, and we followed through all the way till 10 o'clock this morning, right to the bottom of, excuse me, right to the top of the value area. And this completed the bullish 80% rule for this week's value area. Notice where we stopped, 543.25, right? So it's sometimes, I've been talking about this quite a bit. The headlines that you see, that you hear, right, are lining up with technical resistance, right? And I get this sometimes when people are like, oh, you can't use a chart to kind of trade the headlines. Yes, you can, because you're giving where there's resistance. If you've got the right system, and this is, the volume at price is what I use. And it's been telling me where there's resistance. Now, again, there's always an unknown. I don't know if we're going to break higher and go to the next one, but I don't want to push here until I get some type of confirmation. Now, it's not always going to be perfect. Look at the Qs chart. Right? Look at what Qs did on the 1 hour. Again, I went over all these value areas in yesterday's video too. We just stopped at the bottom of the value area yesterday. But where did we stop today? Right at the top of the value area. So again, you could cry and you could whine about all the headlines, and I can do that too. But at the end of the day, like, we've got a roadmap here for telling us where there's resistance. Yes, would I like to see us advance further? Would I like to see it advance above the April 9th highs? Of course I would, right? Because then we've got some nice, like, technical confirmation that we're moving, out of the range and getting above this. But we don't have that yet, and you just have to be patient. But I'll tell you, we were stopping there. This was happening. I don't know if before, those headlines, but it just felt like, the price was starting to get a little bit heavy, right at the top of the value area. Now, I want to show. So let's just back up for a minute, right? So that's the 1 hour chart. Yes, we're above the 20-day moving average, right? And I think that's that's notable, right? So I think, if we can hold above the 20-day moving average, all right, that's something. At least that's some progress, right? If we give it all back and start to kind of move back down here, then you know that this price action is still very challenging. And I think that like, what's the adjustment then? The adjustment is to basically sit and be patient and wait for a clearer picture. After all, we are still below the 200-day moving average. Some people just throw in the towel on the long side and say, once we're below the 200-day moving average, it's you've heard this expression, nothing good happens below the 200-day moving average. So, that's another thing to kind of keep in mind too. Do I want to be doing too much? Or do I want to be, adding a ton of positions when overall the indices are below their 200-day moving average? No, not from a trading aspect, right? And then again, my trading system might be different than yours. Same thing with SPY. We're kind of right at that 20-day moving average. It would be good if we hold above there. But again, we're still decently below those April 9th highs. So we really haven't gone anywhere. So again, like, don't be fooled by these folks on Twitter or social media that tell you how great this market is. If we're so great, we'd be decently above those April 9th highs. All right. Let's not try to let's call a spade a spade. Right, because I see so many people telling you about breadth is so strong and yada yada yada. Come on, folks. It's stop selling people. IWM. Now, this is a little bit different, and I have to say it's surprising to me. Why is it surprising to me? Because the small caps have been horrible, right? And they've been horrible for months. But look they actually got above that closing level just by a little bit of April 9th. So you're actually showing a little bit of relative strength here in the small caps, even though the overall picture is still very challenging. But I'm short term, it's showing a little bit of relative strength. And the next level to watch would be 200. Now, we didn't close like anywhere near the highs of the session, so it's still suspect, but also gotten back inside the value area for the year, which won't count for anything unless we close above that for the week, which is right around 189. I also thought the microcaps were kind of interesting too. Look at the microcaps. Now, again, they have to fight through so much overhead resistance, overhead supply, very difficult. So watch this 109.50, but also interesting, it got above those previous April 9 highs. So again, a little bit different picture going on here. What else did I want to go over in this video? Maybe GLD, just talking about what GLD looks like, and I would keep an eye on this. Note that this big volume here, right, that often signals a short-term blow off top. If you don't believe me, take a look at MSTR, which I know this is another chart that I've been featuring lately. Look at what happened with this. Right, big reversal. This was back in November. Look at the volume, confirming that you've got a blow off top. Now we're finally maybe getting above this pattern of lower highs, right? And maybe you could, that's a name I'll still have on my watch list. I'm going through this video pretty quickly for you, but also, my watch list did, Palantir doing very well. That's the best. I've had this on the watch list for the last couple of weeks. I own it in the TTG trend portfolio. I wish I owned it in my trading account. I didn't. Just to kind of go over, we'll bring up this chart as well. Here's Palantir. Again, if you're not in it, maybe it settles back down into this 20-day moving average. That might be a place to add. That's something that I would be looking for. Ultimately, upside target would be 110.70. One other name I was going to go over to, TEM, which I believe it got a contract today. Let's look to see what this does. 52.16. Again, that's your short-term resistance as well as the 50-day moving average. Let's look at sectors. I want to just give you a quick, again, I send this out every day in the end of day note and Substack. Consumer staples. So what's the strongest right now? Meaning above all the short-term moving averages. Consumer staples, utilities, and well, aerospace. That's not bad, right? And we don't have anything that's weak anymore. And I had that labeled if everything's below, if price is below the 5, 20, and 50-day moving average. This is just short-term, like a momentum gauge of the indices, but you don't have any other than those defensive groups, consumer staples and utilities. You don't have anything that's showing really impressive strength. XAR, let's bring this chart up because I have liked the aerospace names for a while. Eh. Yes, they're above those short-term moving averages, but not above the value area for the month. It got rejected there, did not close above there, above the value area for the year. So is this something to get really excited about? No, not yet. But again, something to keep an eye on. So what would I want to see going forward? I want to see things like Netflix go out and break out without any major challenge, right? Some other names get to new highs, right? A name that gaps up on earnings has follow through for a couple days. That's symbolic of a bull market. I don't know if we're there yet. Again, that's kind of something I will be watching on the plus side. I keep going back and forth with pluses and minuses because that's what this market is right now, right? You've got some nice earnings reactions here, right? So it's not all bad and it's not all good. It's just the fact that I don't know if I really want to be doing anything major in terms of risk taking. Just a couple other names to look at and see how they close. Do you think so? This was a nice move. Face value, GEV up 3%. Is that a great looking candle? No. It it closed very much close to the low of the day. The high of the day was around the open. All right. So again, you have to be patient with this market. Could this be an opportunity to buy GEV? It could be. I'll be watching this, right? So building out a watch list, right? Because I might want to buy this name, but I'm in no rush right this second. All right, guys, that is it for today's video. I hope that helps. If you like this video and if you like what I'm doing here, make sure that you subscribe to the YouTube channel and give the Substack a chance. I really try to put out as much information that you can get your hands on in less than like a 2 or 3 minute read. Have a great night, everybody. See you tomorrow.